block, which are the most of the riskiest trades in the 1 minute time frame, because market can hit your stop loss easily when you trade based on a single candle order block in the 1 minute time frame, and this can be your internal target. Do SMC really work in the gold? We will find out that in this video, and in this video we will backtest the gold using the SMC concepts, and we can use the time frame like 15 minutes in order to buy or sell and to practice our strategy on this gold. And if you want to backtest gold in any other time frame, you can comment below and we will make a also video for that. So first of all, I will show you the rules and strategy that we can use to trade the gold. Like if market is moving to the upside, something like this, and creating higher highs and higher lows, and we will only willing to buy when market break below the previous first low at least. A market should break below the previous first low, and this can be the candle closer or it can be the liquidity sweep only, but we need the break below the first pullback. And if market has any unmitigated order block after that, like at this point, or a order flow or imbalance, we can buy from that point. Or if we get any confirmation when market sweep the liquidity, like at this point, if market sweep the liquidity, then we can also look for a buy in the lower time frames if we get any of the confirmation in the lower time frames. And the opposite is true for the sell side market, because when market is creating a lower lows like this, and we are waiting for the market to tap to break above the first high at least, and wait for the market to tap on any unmitigated order block or order flow, and we can sell at that point, or we can wait for the market to grab the liquidity of the previous highs. And we will also use the structure marking, and there will be a video on our channel, you can watch that on our channel, that how we can mark the structure. So keep this video simple and short. We will now start moving to the 15-minute time frame and we will analyze the structure. This is our 15-minute time frame, and we will move to the backside and start marking the structure from the backside from like this point, because from this point we cannot go back in the 15-minute time frame on this time frame. And now we will start marking the structure in the 15-minute time frame. First of all, as we can see that market was creating higher highs. So where is our first pullback? At least this is the first pullback. When market break below that, we can look for a buy, but market tapped on some unmitigated order block or order flow and then move to the upside, and this point becomes the break of structure. And after the break of structure, we are again looking for a buy. So where we can buy, we again wait for the market to break at least first pullback. This is the internal pullback, but market break below it, but this is only the liquidity sweep. So after the liquidity sweep, we can look for a buy, and this is a single candle order block. If you want to buy directly, you can buy based on the single candle order block, and this is the target for the 15-minute time frame. And we can make another video for the single candle order block if you don't know what is a single candle order block. So after that, market create the break of structure at this point. Now after the break of structure, we again need market to break the first pullback, and this is the first pullback. Market break below this point, so we can again look for a buy in the lower time frame confirmation, and this point again becomes the break of structure. Now why these points are the break of structure, you can look for the structure marking video where we have explained everything in a detail. Now again market move to the upside, and in the same way market again break below the first pullback. So at that point we can also look for a buy in the lower time frames, and market swept the liquidity and move to the upside. So if candle close above this point, this becomes the liquidity sweep, but market didn't close above this point, and again market didn't move above this point, so there can be a chance of a reversal. Now market, as you know, that already swept the liquidity and break below the first pullback. This can be the indication of the trend reversal for the short term or for the long term, and market move to the downside. But if market break above this point and close above this point, this can be our break of structure. Now market moved to the downside and also swept the liquidity of the previous major low at this point, because market didn't close the candles below this point. This was also the liquidity sweep, so we can again look for a buy at this point. Here you can buy again at this point, because market swept the liquidity only and market moved to the upside. In the same way, market again followed the same pattern. Market break below the first pullback, which was at this point, and may tap on this unmitigate order block, which was at this point, and move to the upside. So this point again becomes our break of structure at this point, because we cannot mark any random point break of structure, and there are specific rules for it. So at this point, this becomes our high and this becomes our new major low. If market break below the major low, as the market is moving to the upside, this becomes our change of character. And again, market break below the first pullback, which is at this point. So you can again look for a buy when market swept the liquidity of the previous pullback. And when market break below the first pullback, this point becomes our high. And with the break of the same high, which is our break of structure, at this point, our lower low confirms, which is at this point. Now again, market move to the upside and continue to move to the upside. So when we can buy again, when market break below the first pullback, as you can see that this is the first pullback, market break below this point and also tap on this unmitigated order block. And as we have discussed, when market break below the first pullback and tap on the unmitigated order block, at that point we can look for a buy. So this was our buying point, and where is our target? Our target is at this point. So this is the break of structure, and after the break of structure, this is our high and this is our major low. Now from these 2 points, we are only dealing with the buying. Now where is the next first pullback? This is the next first pullback. Market break below this point, so our higher high comes at this point, but market also break below the major low, which is at this point. So this becomes our change of character, that market structure has shifted to the downside. Now when you can sell when market break above the first pullback. So where is the first pullback? As you can see that all these pullbacks are internal pullbacks. So this is the first pullback. Market break above this point, so you can look for the sell at this point. And where is your target? This low. Market break below this point, so this becomes your break of structure and this becomes the high, and we do not know where is the low yet, because the previous low was at this point. Because of that, this is the break of structure. And after that, where we can sell when market break above the first pullback. So where is the first pullback? This is the first pullback at this point. If market break above this point, we can look for a sell. Market break above this point. Now when market break above this point, this is our new lower low, and we can see that what market did after that, and market again break above the major high, which was at this point. So this becomes the change of character, because candles have been closed by the gold above the previous major high in the 15-minute time frame, and again market continue to move to the upside. So where is the next buying point? When market break or sweep below the first pullback, which is this point. Market swept the liquidity of the previous pullback and we can look for a buy. So this was our target if market create a buying position at the sweep. So this becomes our new high and this is the new low. And again market continue to move to the upside, and this was the first pullback. Market break below this point, so this point becomes our new high. And now we should wait. What market do? Market again move to the upside and break above this point. So this is our again breakout structure, and you can look for a buy. So where you can again buy? Market again swept the liquidity of the previous major low at this point. So you can look for a buy at this point in the in the lower time frames at this point. But if you can see that this wick was unmitigated, and market also tap on this point and then again move to the upside. So you can again look for a buy at this point when market tap on that point. Now after the break of structure, market created a pullbacks and also break below them, which were at these points, first pullback, and also swept the liquidity of previous pullbacks. After the sweep of liquidity, we can again look for a buy. And where is our target? The previous high, which was at this point, and market hit our TP at this point also. So where is our high and low? This becomes our high and this is our next major low. Again market move to the upside and break below the first pullback, and we can again look for a buy, because this was the liquidity sweep only. Market didn't tap on any of the unmitigated order block or imbalance. So at that point our higher high is confirmed and we can look for a buy at this point in the lower time frames, and if we got opportunity to enter at this point, this is our target, and this point also is our break of structure, and market again move to the upside. So market continue to move to the upside, and this was the first pullback which market break below. So our higher high confirms. Where is the higher high? At this point. And market also tap on this unmitigated order block, and we can look for a lower time frame entry at this point. And in the first attempt it was just a liquidity sweep, but after that market closed the candles above this point. So this becomes our new low. Again market continue to move to the upside. So when we can buy? When market break below the first pullback at least. So where is the first pullback? This point is the first pullback. Market break below this point, so our higher high becomes at this point. Now after the higher high we can again look for a buy, but market didn't break above this higher high, as you can see that, but break below the previous major low which was at this point. So this point becomes our change of character, that market has shifted to the downside in the 15-minute time frame, and we can look for a sell at this point. So where is the first pullback? As you can see that all these were the internal pullbacks, and this was the only pullback. If market break above this point, we can look for a sell, and this point is our low. Now market continue to move to the upside, and at this point as you can see that market didn't swept the liquidity of the previous major high. So we can again plan for the sell entry at this point, because this was the major high liquidity sweep. And as you can see that market also gave a single candle order block entry if you don't want to move to the lower time frames, and then drop to the downside from that point. And this point becomes the break of structure again. And after the break of structure, where you can look for a sell? When market break above the first pullback, which is at this point. Market break above this pullback and also mitigated something to the upside, because this is not our real order block, as you can see that, and then again it moved to the downside but unable to break below this low at this point. If market break below this point, this becomes our break of structure. And as you can see that market didn't break below this point for the long time, and then broke it to the downside. So at this point our break of structure confirmed. And where is our higher high? At this point. And again market moved to the downside, so we can again look for a sell when market break above the first pullback. So where is the first pullback? As you can see that all these pullbacks are internal pullbacks, so we cannot count that as a first pullback. So where is the first pullback? At this point. Okay, after the break above the first pullback, which is at this point, we can look for a sell, and market tap on this unmitigated order flow. This was at this point and move to the downside. So we can look for a sell at this point, but market unable to create the new low. So if we move to the right side, this was the consolidation part at this point, and again market move to the upside and break above this previous major high. So our direction is shifted to the upside, and we can now look for a buy. So where is the first pullback? This point is the first pullback, and we can look for a buy after break below the first pullback. Market break below this point, so there is lot more POIs where we can look for a buy, but as you can see that this was the unmitigated order flow at this point. Market tap on this point and again move to the upside from this point. So this was our previous major high, and market again break above this point. So this is the break of structure, and after the break of structure we can again look for a buy when market break below the first pullback, which is at this point. Market break below this point, so we can again look for a buy, and this was our unmitigated order block. Market tap on it, even though it served the liquidity of this pullback and also the order block, we can look for a buy. So this is our high and this is our low, and market move to the upside from this point after the long consolidation, and this point becomes the break of structure. And after the break of structure, we can again wait for the market to break below first pullback, which is at this point. And after the break below first pullback, we can look for a buy, and market also swept the liquidity of these lows. So we can again look for the entries in the lower time frames at this point. And again we will wait for the market to break above this point, because this is our major target. market broke above this point, so that is our breakout structure, and this is a major high and this is the low. And again market repeated the same pattern. This was the first low at this point, which is internal. Market break below this point, so we can again look for a buy, and also this point becomes the high, and at the same point this high was broken by the market, which was our target. So this is our again breakout structure, and this is the lowest point, so this becomes our new low. And in the same way market continue to repeat the same process, and in the same way market continue to move to the upside, and this was the first pullback. Market break below this point and we can look for a buy, and this was our first high, and this was the low, and market break above this point and this becomes the breakout structure. And after the breakout structure, same process we can repeat again, and this was the first pullback. Market break below this point, we can look for a buy. Market tap on the unmitigated order flow or order block, and this point is the breakout structure. Even though it was just a liquidity sweep in the first attempt, but market break above this point and close the candle above this point in the following candles like at this point. And again as you can see that market break below the first pullback at this point, so we can look for a buy, and also this point becomes our new high. And then again market also break below the major low, which is the change of character, and now again we have shifted to the downside in the lower time frames like 15 minute. And now when we can sell, when market break above the first pullback. So where is the first pullback? As you can see that market continue to drop to the downside, and the only first pullback is at this point. Market break above this point, so we can look for a sell. Market mitigated something to the upside and gave a move to the downside, but unable to break below the first low, which was at this point. So if market break below this point, this will become our breakout structure, but if market break above the previous major high, that will become our change of character to the upside. Market continue to move to the upside and also break above the previous major high, which was at this point. So this point becomes the change of character, and we again shifted to the bullish side in the 15-minute time frame. So when we can buy again, this was the first pullback. Market break below this point and it also break below this point, swept the liquidity of the previous pullbacks. So we can look for a buy at those points like at this point. And as you can see that this was our target at this point. Market swept the liquidity at this point, so we can again look for a sell at this point because this was just a liquidity sweep. So we can expect the market to move to the downside until it break the 15-minute first pullback, which is at this point. And at this point we can again look for a buy in the lower time frames. Now we will move to the lower time frames like 1 minute and look for the entries as far as our chart allows, because I do not have a premium version of the trading view. Now as you can see that this was the liquidity sweep, so we can look for a buy. So when we can buy, when market break above the first pullback after the sweep of a higher time frame liquidity, this will become our change of character, which is at this point. So market break above this point, so this is our change of character, and we again wait for the market to grab the liquidity in the lower time frames like 1 minute. This was the liquidity. Market grab this liquidity and also tap on this unmitigated order block in the 1 minute time frame, and this was the entry point. This is our stop loss, and you can target the recent major high, and this high was our target because this was the first high, main high in the 15-minute time frame, and this was the trade that you can take. And again in the same way, at this point market swept the liquidity of the previous 15-minute high, so we wait for the market to break below the first pullback, which is at this point. Now because market has already swept the liquidity, so we can again look for the market to sell directly when market tap on this point. So market tap on this point, you can look for a sell. This was the high risk entry, but you can lower your capital risk at this point and target the first 15-minute low, which is at this point. So this was a trade that you can take. Again this was the liquidity sweep of the 15-minute low, so you can again look for a buy. So when you can buy, when market break above the first pullback, which is at this point. So this is the first high break, this is a change of character in the lower time frames, and after that we can look for a buy, but there is a no liquidity sweep in the lower time frame, so we have to wait for the market to sweep the liquidity in the 1 minute time frame. And at these points market swept the liquidity of the previous pullbacks, so we wait for the market to tap on any unmitigated POI, which is this unmitigated wick. Market tap on this point and also created the single candle order block. This was the entry for us, and this is our stop loss, and we can target the 15-minute high, which is at this point, and this was our stop loss hit at this trade. So again, if we move to the backside, this was the so from this point we cannot go back any further, and if you can see that this was the previous breakout structure in the 15-minute time frame, and if you want to scale the entries from any this point, like if we can say that this is the POI of the 15-minute time frame, we will wait for the market to break above the first pullback, which is our change of character, and after the change of character we again wait for the market to grab the liquidity below the previous lows, and after that this is our unmitigated POI. Market tap on this point and we can look for a buy at this point. This is our stop loss, and you can target the 15-minute high, which is at this point. So this was the trade that you can take, and again in the same way, when market break below the first pullback in the 15-minute, because this was the internal 15-minute first pullback low, market break below this point, and we will wait for the market to break above the first pullback, which is the change of character, and after the change of character we will again wait for the lower time frame liquidity grab, which was at this point, and market didn't tap on any of the unmitigated order block but tap on this unmitigated imbalance. And if we buy from this point, this is our stop loss at this point, and we can target the recent 15-minute high, which was at this point. So these were the trades that you can take. This was the bigger trades, and you can also again scale for the more entries, like in the internal 15-minute lows liquidity sweep, like these were the 15-minute lows in the internal market, internal structure, and you can wait for the market to grab the liquidity, and as you can see that in the lower time frames market grab the liquidity at this point also, but didn't give the entry till this point, because this was the previous low liquidity sweep. Market swept the liquidity and again break above the first high, so you can look for the entry when market break above this point, because this was the unmitigated order flow. This was your entry, this was your stop loss, and you can target the major high, which was at this point. In this way you can scale entries and target the 15-minute highs, and there can be many more trades. Like at this point, if market sweep the liquidity of the 15-minute internal highs to the downside, you can look for a sell, because this was the high of the 15-minute time frame, and market swept the liquidity and also break below the first pullback. So this is the change of character, and after the change of character you again wait for the market to grab the liquidity in the lower time frames, which is at this point. Market grab the liquidity at this point, and after the grab of liquidity you can look for a sell, and you can also place trade based on the single candle order block, which are the most of the riskiest trades in the 1 minute time frame, because market can hit your stop loss easily when you trade based on a single candle order block in the 1 minute time frame, and this can be your internal target, and these can be the trades for you when you use the 15-minute internal lows as your targets. And this was again the 15-minute internal low, and market break above this point. You can wait for the market to break above below the first pullback, which is your change of character, and after the change of character you can look for again the lower time frame liquidity, and then again sell. So where is the lower time frame liquidity? This point is the lower time frame liquidity. Market grab the liquidity, tap on this 1 minute order block, and also create the single candle order block, so you can again place the entry at this point, stop loss above the order block, and target the low, which is at this point. And if you put the trade open. This was your trade, and again, in this way you can trade any point using the same concept. I hope you understand this, and if you want to backtest for me gold in the another time frames, you can comment below, and if you have any other queries you can also comment below, and I will make separate videos for that. Thanks for watching this video.